far as the stock market goes, the stock market has been it's become structured quite differently over the last 15 years. I don't know how much you or your listeners are familiar with what has become the massive passive bid, and by that I mean retirement money that flows largely to Vanguard and BlackRock, where they just have created a massive market index, and that passive bid has dramatically distorted the behavior of the stock market, and it is likely to exert undue influence prospectively in both directions. Thus far, for the last 15 or 20 years, all there has been a positive contribution to market action because of the way that the money gets allocated. People have seen the upside of it. They have not seen the downside of it yet. The downside, when it happens, will be rather brutal and unpleasant, because you're going to reverse the mindless buying on the upside with mindless selling on the downside. And that's going to be a big problem. But I don't want to get ahead of myself. I'm just bringing it up in case anyone who is part of your listener base doesn't know that, because you need to understand it. So that's why we have these ridiculously valued large caps tech stocks, where the fundamentals are nothing great. Like in particular, Apple is a great example. They haven't been able to grow earnings for going on 2 years now. It sports a PE north of 30, and that's just one example. So anyway, I think that the market that we're in, there's a possibility that the rally will continue, particularly if the Fed decides to cut rates here in July and in September, or just in September, or there continues to be the hope that that'll be the case. That could precipitate a continuation of the rally. There's a possibility that we may see smaller caps outperform. Recently, we've seen the Russell index do quite a bit better than the NASDAQ. And part of that has been the unwinding of people of market players, hedge fund operators, who have been long the big tech stocks, the so-called AI theme, and short the Russell as a hedge. Now that isn't working. And so you've seen an unwinding of that. And whether that's actually the start of a new trend where maybe smaller stocks do better, I can't say. It may just be noise, but there is that is going on. And so we are entering what could be, maybe another leg up. And if that were to occur, I think it would only increase the risks of something pretty ugly on the downside later on this year, early next year. But for that to start, most likely you'll need to see some sort of a diminution in the flow of money into the passive entities. So that's a long answer. It's a place to start, I guess.